Now, are you ready to meet our speaker? Because I'll be introducing her in a bit and she will be coming on to talk about why we are here. Hey, who is our speaker today? She is Olushola Abraham and she's a finance and investment manager at Faith Foundation. Olushola is a chartered accountant. She's got extensive experience in financial management, reporting, budgeting, and audit readiness, spanning different organizations in the non-profit sector and also, of course, in the for-profit sector. So, if you really, really, really want to get something to do, I'll say, try not to multitask. Try to give it all of your attention. Get your notes, get your pens, and let us listen to Olushola because she has worked with numerous organizations. She has worked with a lot of entrepreneurs as well, helping them to strengthen their internal control system, helping them to set up their accounting system so that it will serve their organization for good. She's also the co-founder of Fave Accounts. If you want to check it out, it's a financial management platform that helps small businesses to track their performance so they're not just spending money, they know how they're doing, and also to manage cash flow and build financially sound businesses. Somebody needs to mute their mics. Could you please mute your mic? Thank you very much. All right, thank you so much. So let us make welcome Olushola Abraham. Olushola, are you there? Okay.
Good morning, everyone.
Yeah.
Good morning. Good morning. Please confirm you can hear me. Thank you very much, Abiodun, for the warm welcome. Thank you so much, ACT Foundation, for having me. I'm so excited, super excited to be here talking about accounting structures. I think I've been seeing quite a number of foundations introducing themselves in the chat box. Well done, everyone. I mean, the work that we do is super, super important for our community, for the country at large. And I'm super excited to be contributing in this way in terms of accounting structures and how that helps. I don't know if you can put up my slide because I can't see it from here. Okay, welcome, welcome. Thank you, everyone. Can you please put up the slides? I'm not seeing it.
Okay, it's coming up in a moment.
Okay, thank you. Okay, so today we're talking about accounting structures, and I was listening in when we're having the pool, and it's interesting and it's commendable that a lot of us already have systems and structures that are running for our organization, because it's really important. I mean, things are changing, as some of us would already know. A lot is changing in the non-profit and social enterprise sector. A lot of donors are demanding for more accountability. I mean, before now, some donors that are not even asking, or some partners that are not asking for audited reports beyond financial reports, are not even asking for audited reports. Projects that you've done 5 years ago, 10 years ago, if you want to renew that project, or if they want to maybe give you additional grants or donations, some of them are saying, we want your accounts audited. I mean, so you can imagine if you don't have a structure that allows for that, you can miss opportunities and you can lose trust and things like that. And you really don't want that for your organization. So generally, finance system helps us with operational efficiency, decision making, beyond even reporting to donors and partners. It helps with strategic decision making. Most importantly, sustainability. I mean, sustainability is something that is really, really important for any NGO. It's something that if you don't have it right now, if you don't have that strong structure that helps for long-term sustainability, it's something that you really want to think about. We're very, very passionate people. We are there's a lot that we want to do, but the truth of the matter is if we're not sustainable, we're not able to do those things long term. We're not able to have those impacts long term. So, and that's why this conversation about accounting structure is super, super important. Next slide, please. So we're going to be talking about the building blocks, the things that we need to look out for when we're talking about the accounting structure, right? We'll be talking about internal controls, documentation standard. We're talking about donor reporting. Some of us already do these things, but some things that can help us even better at it, audit readiness, financial reporting and decision making, technological tools that can help us, and of course, long-term sustainability. So we'll be starting with, next slide, please. So we'll be starting with accounting systems, right? We'll be starting with accounting systems. So I have a question for us, right? And we don't necessarily need to respond, but it's just something to think through. So if your organization received, a donation today, and maybe, you've run that program for 6 months, 1 year, 2 years, and the donor or partner wants, or you received a grant or a donation maybe last year or 2 years ago, and the partner wants the report now, or they even requested for reports, urgently, right, from me, because some donors or partners actually do that, right, to make certain decisions. How easily can your finance system not just provide reports, provide accurate, complete, reliable reports or reliable information? I mean, that is really, really important. And that's one of the things we're talking about today, right? How easily can you do that? Do you need to, spend like 3 nights having to put the documents together or put the information together? And even after that, you're not able to put together complete, reliable information, that makes your donor to continue to work with you and all of that. So that's something that's a question for us. If we are still in that position where we're not able to do it, then we really need to look at our structure properly. Next slide, please. So we really need to look at our structure properly. And when we are looking at the things, so if you're looking to build an effective accounting structure, what are the things you should be looking at? What are the things you should be looking at? The very first one that we're going to be talking about is our charts of accounts. We're talking about financial structure. You're talking about charts of accounts. Looking at it technically now, you need to have a chart. You need to have charts of accounts that makes it easy, right, for you to be able to prepare financial reports or programs reports that you send to your donors and all of that. So your charts of accounts has to be structured in a way that makes it easy for you to be. So for instance, as an organization, you probably have more than 1, more than 2, more than 5, 10 donors or partners that you work with, and you use just one accounting system, right? If you use just one accounting system, if you don't have your chart of accounts in such a way that you're able to get reports for just one donor and it's clear, is structured, you don't need to do so much to be able to send a report to your partner, then it's something you need to really look at your structure. Because if you don't have your chart of accounts structured in that way, you would struggle to even be able to produce complete, accurate reports, right? So we'll look into that in detail, how your chart of accounts should be, like recommended ways. Of course, you still need to tailor into the to your organization specifically, but we're going to be looking at how we can have that done and how we can help us have effective accounting system. This very second one, which is super important. In fact, if you are paying so dollars or so naira on a good software and you do not have this number 2, every other thing really I wouldn't say, I don't want to say it's a waste, but it's not going to be, at the end of the day, you're still going to struggle. So your policies, your processes, your workflow design is very, very important. That's like the foundation. So you need to have a proper documented policy and procedure and workflow design for your organization. So not just have it in your head, because I know a lot of us, we've probably have discussion. For some of us, we've already had discussions with our team members to say, okay, this is how it's done. This person pays this person does this, but it needs to be documented. It needs to be properly documented. It needs to be approved by if you have a board, for instance, it needs to be approved that, the organization is structured in that way to know that this is our policy. This is what happens when this happens. This is the procedure for this. So for instance, your budgeting, this is the procedure for budgeting. This is what happens every month, this is what happens every quarter. This is what happens. This is who does what, right? Responsibilities, assigning responsibilities and all of that. And we'll also be talking about that briefly under internal controls as well. So having a proper policy and having procedures and workflow design is very important for accountability, for us to also create consistency. It's very, very important. And even some partners would request for your finance policy. What are your processes, what are your procedures? They want to know, because these things are really important when it has to do with having accurate financial reports. They also want to know what your policies and procedures are as well. So that is really important, even beyond donors or partners asking for it. Is really important even as an organization to have it. And even if you're not an NGO, any organization, policies, procedures is the foundation. You need to set that first, and that is what it would even determine what your chart of accounts would look like and things like that. So the next one is documentation. I mean, this is really important. As simple as this is, a lot of organizations miss this, and this is very, very important when you're talking about your audit readiness. If you don't have proper support documents for your transactions and all of that, the auditors, I mean, they are not going to just take your word for it. There has to be documentations, there has to be support documents. And when I'm talking about documentations now, beyond, I mean, there are support documents such as invoices, contract documents that are signed, receipts and all of that, but also having things documented, having for instance, as an organization, you need to have like a place where you file your documents. It doesn't have to be physical. I mean, we have moved from that era where documents are filed physically. You can file them electronically and have it every single transaction, every single thing that happens within the organization. As long as finance is involved, it has to all be documented, right? So all of these things are the things that makes us audit ready, right? So when we're talking about audit readiness, documentation is very, very key, right? So it also helps us to, so for instance as well, your system is not to be depending on one person. You're not depending on an individual for anything. You're not depending on even the CEO for anything. You're depending on structures, processes, documentation. So for instance, if you have an organization and you have, let's say, a finance team that is helping with a particular project, right? And they're the ones working on the payments, the transactions and all of that. Let's say it's a 5-year project. If none of them are there in the next 5 years, and you need to do an audit for that project in the next 5 years, if you do not have documentation, there will be problems. You would have issues tracing what happened, where, when did they make payments and all of that, the support documents, and that can really, really affect donor confidence. If, for instance, an organization or a donor has trusted you to, give you funds to run a project, and after 5 years, they want to renew that contract and they need to do an audit for that contract, for that project, right? And you're not able to produce certain documents, even if it's in the last 10 years, it would affect their confidence, and it might, just a single document can be the reason why they won't go further with, with that project or with that program. So it's really, really important. As simple as it is, documentation is very, very important. The next one is internal controls, and this is somewhat similar to policies and procedures, but they are different. The internal controls is having things like segregation of duties, and we'll get to that as well. We'll talk in details about the internal controls and all of that. So you need to have controls in place, controls that guides against fraud, errors. Like I said, you're not depending, your structure should not depend on a human being. You should have a structure. So even if one person leaves, it doesn't disrupt your organization and all of that. So you should have structures like that. So segregation of duties, such as not one person handling a whole transaction and all of that. Like I said, we'll get into the details of that. So internal control. So when you're looking at when you want to assess whether you have an effective accounting system, these are the things that you need to look out for. Number one, do I have this structure? Do I have policies? Do I have a finance policy documents? Do I have my transaction processing documentation? Is it in place? My internal controls and financial safeguard, do I have internal controls? The next one is budgeting, cash flow, and financial monitoring. Super, super important. Super, super important. In fact, budgeting and cash flow is more important for NGOs than even for profit-making organizations. The reason is because the funds, except you probably have paid programs or other things that gives you income that are not from donors or partners and all of that. Even if you have that, it's a little percentage compared, because you're as an NGO, you are mainly focused, your revenue source or your income source is mostly from donors, from partners and all of that. So budgets and cash flow, especially cash flow projection, your budgeting and cash flow projection is super important. The reason, let me give an example. For instance, you can have, say, $500,000 as cash in your, just an example, right? As cash in your organization. And you'll be looking at that money and say, oh, we have funds to pay salaries, we have funds to do this, we have funds to do that. But when you analyze it further, you realize that out of that $500,000, you probably have, let's say you have 10 partners, for instance, $50,000 each from those 10 partners, right? And out of that $50,000, there are responsibilities and things that you have to do, right, to be able to meet up with the programs that you've been giving that funds for, right? So let's say out of the $50,000, what you actually have, say, for salaries or for overheads is just $5,000, right? By the time you have, let's say, $5,000 each from all the 10 partners, at the end of the day, you probably have just $50,000 for overheads. And you're looking at the $500,000 in your account saying that you have funds. The issues will not come up today. The issues will come up in the next 2 years, especially if there are projects that are long-term, let's say 2, 3, 5, maybe you have contracts or partnership for 5 years or 2 years. The issues won't come up today. The issues will come up in the next 5 years, right? Or in the next 10 years. That's when there will be issues, right? So, and the issues such as, liquidity issues, when you need to then make payments for certain things, especially the ones that are program related and you're not able to make payments for those, or even overheads and things like that. And we'll also talk about sustainability and how to also, the effective way to go about that when it has to do with financial sustainability as well. So budgeting cash flows is also very, very important when you're talking about effective accounting structure. So how are you tracking? What's the system for tracking, for budget tracking, for fund utilization? What's the system, right? So that is really, really important as well. The last one is also reporting. We've talked about donor reporting as well. So reporting, what's the process for that? Financial reporting as well, because donor reporting is external, but financial reporting, which is internal, is also really important, because that's how you're able to manage the finances of the foundation or the organization generally, right? So we'll also be talking about some KPIs, some things, next slide please, some KPIs, some things that you need to look out for from time to time to be sure that you're actually on track. Now, I mentioned that we'll talk about charts of accounts in detail. For charts of account, if you already have charts of account structure, or you're trying to build a chart of account, these are things that you need to look out for, especially as an NGO. Your chart of account should be able to help you track payments according to the currencies. The reason for that is if you're not able to track payments according to currencies, you can mix up this exchange gains, losses, you can mix it up, even when you're reporting to donors that are maybe international fundings and all of that, you can mix things up and it can get really messy. So you need to be able to track currency. You need to also be able to track payments according to the project, right? Both inflows and outflows, both revenues and expenses. You need to be able to track it, right? Another thing, you need to also be able to track funds according to their classification. So let me use revenue as an example, right? There are some payments that are unrestricted. So they're just donation types of unrestricted funds, and maybe just people just donate and just say, oh, we're donating. Maybe a group just came together and donated funds to your organization without any obligation to carry out anything. It's not for a specific project or any specific program. It's just a donation. Those are unrestricted funds. So you need to be able to classify in your chart of account, you need to be able to classify it that way to say these are just unrestricted funds. And even under unrestricted funds, you can further classify it. If some maybe you have people that make payments regularly, maybe membership fees or something like that, general donation. So you can further classify it that way, but you have a code that says unrestricted funds, right? That's one. And then when you have other funds, maybe grants, now maybe grants that has that are restricted. I mean, when I mean restricted, you have obligations. There's things that you need to do or fulfill for the grants that you have been given. So you need to also classify that separately. And the grants for each organization has to also be clear. Now, I understand that, oh, some programs are just, maybe they just run for 3 months, some just run for 2 months. So how do you go about that? If, for instance, you can have a classification. For instance, if you run programs for women, and usually get different funds or grants from different foundations, and maybe they're just short programs. You can have women projects, right? Or women projects, and then funds that come in for that, if they're short programs, can go into that. But it's always better if the programs have more than 1 year, you actually have a separate classification for it in your chart of accounts. So it's easy to track, especially if, there's the likelihood that they'll renew that, they'll come back for you to do another program and things like that. So you have to, separate it in your chart of accounts. So separate grants from donors, from donations. If you have in-kind donations, separate it as well, so that you're not, again, this is also important for cash management, for financial, for decision making, because in-kind donations are services, right? They're not, you didn't get the cash. They probably donated the professional services or maybe equipment and things like that. You need to also separate that properly. So your chart of accounts should be able to help you to get information about any donor or partner immediately. You shouldn't be spending more than 2 minutes getting an information for any donor. If a donor asks you if you have a good chart of accounts, if a donor asks you for a report today, you should be able to give them that report today if you have a good chart of accounts, right? And these are ways you can structure your chart of accounts for you to be able to have reports done properly and faster, right? When you're looking at your, okay, thank you. Next slide. Okay, so for practical ways, thank you. Okay, so for practical ways to, and we can go through I don't know if the slides will be available. We can go through it and, look into this. So for charts of accounts, it still depends on your particular organization, right? It's always, organizations are different, so you still have to tailor it to your organization. But generally, these are the things that can help. For strategies for having effective charts of accounts, first and foremost, like I said, it depends on your organization. So you need to identify your own personal needs as an organization, identify the donors, the type of reports that they require, your audit needs. For instance, some partners would require audited reports. Beyond programs report, they will still ask you for audited reports. So you need to understand your particular needs. And again, even when you're building your chart of accounts, don't also restrict it to the needs that you have now. You need to think, oh, for instance, if a partner asks for an audit, does my chart of accounts allow me to be able to do that, right? And all of that. So, so you need to know your particular needs, right? And the next thing is to assign ownership to your chart of accounts. So like I mentioned in the previous slide, you need to know what are the donations that I have, what are the grants that I have a code, a different code for each of them, especially if there are programs that are running for more than 1 year. Even if they're for 3 months, 6 months, you should still have a general chart of account for such programs so that it's easy to track such programs and easy to report, right? And again, when you're building your chart of accounts, you don't just think about now. You have to have a chart of account that is scalable, meaning that when you have more donations, when you have more grants, can your chart of accounts, when your system, I mean, for instance, tomorrow, if you decide to begin to run paid programs and things like that, can your system allow for that? Or when you begin to do other things, right, can your system allow for that? So you need to keep the structure scalable, right? In terms of currency. So for instance, if what you do currently is just I mean, the type of grants you get currently is just local type of grants, you need to also think, okay, what if I begin to get international grants? Can I scale my system, to allow me have a good accounting structure for that? And we'll talk in details about some of these things, like I said. So building and also building processes. This is really important. You can have a super well-structured chart of accounts without processes. It's just if you can have a good chart of accounts, you can have an expensive accounting software. If you don't have proper process around that, I mean, your system is still not effective. It's still not going to be effective. So establishing process is really important. Posting, who is posting, who is reviewing, what is the approval workflow, for instance, an example is you can have a structure, and all of these things will be in your finance policy manual. Like we mentioned earlier, your manual is really important, having it documented so that when people come and go, it's not dependent on a human being. When somebody leaves, somebody comes, they know what the policy is, what the manual says, and they follow suit. So example of the type of policy you can have is that it's probably just the CFO or finance manager that approves a chart of accounts to be in your chart of accounts so that you don't have duplications. So you have like 3 different charts of accounts that are doing the same thing. It can be confusing. Somebody is posting into one, another person is posting into another one, and it just makes the accounts messy. So have policies like that, such as establishing posting guidelines. How do we make our posts? Who reviews it? Who does the reconciliations and things like that? Monthly reviews as well, so that everything is consistent and it's easy to track things. When something goes wrong, we know where it's coming from and things like that. Another mistake I mean that some organizations make is to think that when it has to do with finance, it's just a finance team that is concerned. No, even the programs team, everybody, you need to get everybody involved, right? Because everything that you do within the organizations, you still have a financial part of it. So every single person, including programs, non-finance team members, need to be aware of certain things. Of course, not everything. Some things will obviously be confidential, but things like what our expense categorization is really, really important, because you need to get them. They are also part of the people that help you manage the money. So you need to get them involved. They need to be trained on certain things, such as expense categorization. What I mean by that is, for instance, if you have program team members managing projects, right, they will have needs, right? And to have a proper process, you can have them making requisitions, right? It can be electronically. If you're not able to afford that, you can have a form, that is designed for that, where they make requisitions, right? When they make requisitions, it's important that they make those requisitions using the proper expense category. So nothing is confusing, right? If you have a code or an expense category that is, say, let me use a simple one, advertisements, right? When they are raising their requisition, they use that expense categorization to raise requisitions and use that code. If you have a code, you can let everybody know the code. So they use the code, the expense categorization, to raise requisitions, and it makes it seamless. You also let them know what the processes are, the type of support document. So everybody already knows, oh, if I'm raising requisition for say maybe an all, there has to be approved. There has to be, first and foremost, I need to raise a requisition, right? My line manager has to approve, right? So there has to be approval, signed requisitions and things like that. There has to be support documents. So I cannot send any requisition. I cannot make requests without support documents. So the non-finance team members need to be aware of this so that they support the finance team members as well. So things like that. So it's really, really important that you carry the non-finance team members along and train them when necessary. And also your chart of accounts should be reviewed periodically because, I mean, things will change. Things will change. You need to add more charts of accounts at some point and things like that. So just to review it to be sure that, it's still aligned with your current state, right? So we're moving to the internal controls now. I mentioned that we'll talk more about the internal controls. So for internal controls, these are the areas that you need to look out for when you are building when you're talking about internal controls. And once you know what the controls are, you also need to have it documented and have every single person involved have these documents and they are aware of it, right? So the first one is segregation of duties. Segregation of duties is very important. And I know some people might say, oh, we have a very lean team. It's just one person in the finance team, or it's just two people in the finance team. Yes, that happens. You can still have, although it's better when you have more people, right? Obviously, but even if it's just one, two people in your finance team, and even within the organization, you don't have a lot of people, you can still build a structure that helps. For segregation of duties, let me use a small organization, because if you have a large finance team or large organization, it's easy, one finance team member initiates, another approves, another reconciles, another does that, and all of that. But if you have a lean team, it seems like, oh, it's really difficult. Let me give an example. If, for instance, you have just two members in your finance team, right, and you need somebody to initiate, you need another person to reconcile, you need another person to review, you need another person to, prepare reports and all of that for internal control's sake, you can have one team member, finance team member initiate, right? And in this case, it's always better if you also have a board, right? If you have a lean team, one thing that can help your internal control is to have a board, right? I mean, 2-3 board members, because that also it also strengthens the internal controls if you have a lean team. That's one thing you can do. So you can have one team member, or you can have a programs team member, right, initiating. You can have one finance team member then maybe uploading payments on your bank app and all of that, not approving, uploading it. You can have that finance team also reviewing the initiations from the programs team member, ensuring that, okay, these things align with the budgets and all of that, reviewing and all of that. Then you can have the other finance team member approving. So approving, so if there's been initiation from programs team members, right? And that's why it's also important, especially if you have a lean team, that you train your program team members as well for them to be able to support the finance team. So when they are initiating, they are trained they know what the process is, they are trained to compare with the budgets before they initiate. So they will be able to say, okay, this is the budget line, in their requisition, they will reference the budget line as well for whatever program they are raising funds for, or raising, the requisitions for, right? Then they can have, if you have maybe more than 2-3 programs officers, you can have another program officer approve what the first program officer has initiated to be sure that, okay, yes, it actually aligns with the budget, the support documents are the right support documents and things like that. So a finance team member can then review all, collate everything, review everything, just to double check that is in line with the budget and all of that. Then you have the second finance team member approves all of those collation, right? So when it has to do with payments, one finance team member can also initiate, and the second finance team member can do the first approval, and then you can have an executive member approve it. So if you have a lean team, some things you can have the board review as well, and you can have like payments. So when it has to be approval and authorization, for instance, you can have like different authorization levels. Next slide, please. You can have different authorization levels. You can have a different person is, let's say, for instance, the finance team, the limit for them is say 1 million. The finance manager, the limit is 5 million. Executive is so million. So it just helps, right, to have limits like that. So when it has to do with internal controls, these are some questions that you should ask for different transactions. I mean, when you have a transaction, what was purchased? It has to be properly documented. What was purchased? Why was it purchased? It needs to be properly documented. Who approved it, right? There has to be an approval, right, for that. Who is the donor? And what's the project for? So you're able to track it because all of your project needs to have and we'll talk about budgets because that's really important. That's the foundation. You shouldn't be making any payments without linking it to your budget. So what project is it for? Okay, is an ACT Foundation grant. What is the budget? Is it in alignment with the budget? Are there evidences for this payment, invoices and all of that? And all of those things are documented in your file electronically and also in your accounting software, right? So those things. So minimum documentation, payments requests, invoices from vendors, receipts, proof of payments, budget approval reference, and then also filing it electronically. If you file electronically, it's actually advisable that you file electronically, right? So those are things that you can do. Next slide. And this is just like a graphical representation of what an internal control can look like for an organization. So segregation of duty, it helps you to prevent error. Aside from fraud, right? It also helps to prevent error. If one person is, having to work on the process from, end to end, there's possibility for error. But if you have one person initiating the payments, another person approving, they can see an error at that point. Another person reconciling, they can see an error at that point as well. So segregation of duty helps to prevent error and fraud. And, you don't have one person doing everything. So, you can check how it works in the example there. Approval and authorization as well. You have all transactions will require prior approval. All transactions require. I'm repeating this because there are times where you say, oh, we're in a rush, we need to quickly do this. And then there are no approvals. I mean, you don't want to have a process that you're not following. You have to, again, this is where discipline comes in. If you have a policy, you have to ensure that no matter the urgency. And again, for NGOs, if things are properly planned, there's really no urgency because you already know what the program is about. You already know you need to run the program at so time. You already know what the budget says, so there's really no urgency except things are not planned properly, right? So you need to ensure that only authorized transactions are approved and payments are also made within limits. So if you have a lean team, you can have your board come in, at certain levels to approve certain, maybe high ticket transactions, right? Documentations and control, we've talked about that already. Reconciliations and review, so you can have somebody else reconciling to ensure that, okay, budgets versus actuals are actually aligned, your GL postings are done properly, there are no errors, because truth of the matter is, it's humans that are doing it, and it's possible that somebody mistakenly wanted to post to so GL and posted into another accounting, into another GL. So when somebody else is doing reconciliation, they are able to correct all of that. And there are other, reconciliation checklists, and you can go through that. You have checking budget versus actual, fixed assets, reconciliation, inter-project and inter-fund reconciliation. So you also need to, like I mentioned, you need to, for proper cash management, you also always have to check your cash flows. You also always have to check your cash. So these funds are going out. Are they going from the right source? Are they going from the right accounts and things like that? And another thing in terms of structure that you can do is to have, because nowadays banks allow you to have different sub-accounts, right, for different projects. So you can have different sub-accounts for different projects. So you're able to manage the cash properly, so okay, this is the balance, although you're not depending on just bank account balances, but it helps to separate things, and you're able to see, okay, when you're making funds for so projects, it goes from that account and things like that. So reconciliations, even for bank accounts as well, helps. So system controls, as well. So this is where we're talking about filing, right? So if you're filing and you have a system that you use for that, you need to ensure that it's the right people that have access to that file. You don't want program team members and everybody else to have access to very confidential and important documents, right? So you need to ensure that the right people have access to such documentation. Maybe if there's need, some team members can just have viewing access to documents that concerns them and all of that. So that is super, super, super important, because you can be working on your filings and your documenting, but if these things are not properly controlled, you can lose documents, you can lose certain information, and it can be very harmful for the organization in general. So the last one is oversight and monitoring control. Your policies and SOPs should also be reviewed from time to time, because things will change. You can then have more team members within the organization, so you can review. And like I said, these structures would depend on the organization, depends on the size, depends on where you are at right now, it depends on what it is that you're doing. So, as the organization evolves, right, you need to continue to review your policy and all of that. It helps when you have, these things, and it just supports it supports reporting and things like that, right? So the next thing we'll be talking about is the donor reporting, right? And for some of us in the pool, we mentioned that our donor reports are always on point and all of that. And these are things that can help us to further strengthen our donor reporting. Donor reporting is super important. One of the reasons it's very important is because this is where we get the confidence. This is the place where our donors trust us. This is where they know that, okay, yes, I can renew they can do so projects again, or they're managing the funds properly and things like that. So our donor financial report is very important. And the very first area that we look out for when we're doing our donor reports is our budget versus actuals. And before I continue, how you know that your donor report is on point, right? Is that the donors don't have to ask you so many questions. When they begin to ask you, oh, why is this like this? Oh, this one, what did you do? Can we have this? Can we have that? Then there's already an issue with your donor report. Your donor report should be in such a way that the donors don't have a lot of questions to ask you. Your report already answers all the questions that they might have, especially if they already have a template, right? Because a lot of, donors or partners already have template. If they already have a template, make sure that you align with that template, and they don't need to ask you for different information even after sending the report, right? So your reports usually should show you, except the templates that the donor or partner has provided, states otherwise. But you should, ordinarily your report should show budget versus actuals, right? What is the budget? Because at the beginning of the project, there's usually a budget, right? Your budget, what's your actual spending, what are the variances? A lot of times that variances speaks a lot, right, about how funds are managed. So, and that's why you need to have a structure that allows you to manage, right, those funds. It's not when it's time for reporting that you realize that you have overspent 50% on a budget line, right? It should be tracked on a monthly basis. Even that's why, even from the process, from the point of initiating the contract, you are comparing it with the budget, you're comparing it with the actuals. You already know, okay, on this particular line item, we've already gone overboard. What can we do? So those decisions are made before the deed is done, right? So it's not at the point of reporting. At the point of reporting, you're literally just reporting, this is what has happened. How you manage it is in your structure. Within the structure, you are comparing with the budgets at every point in time before payments are made and all of that. As well, for you to have a very good, like at the beginning of the session, I asked the question, right, that if a donor asks you for a report, how easily can you prepare that report? The things that helps, like I'd mentioned before, your chart of accounts, you have an effective chart of accounts, your internal controls are in place, and you also have a finance policy manual that supports that, right? Another question that a lot of us might have is about multi-currency consistency or multi-currency transactions. So if we have donors that pay us internationally, right? So, out of internationally, they pay us in dollars, euros, and all of that. How do we manage that? How do we report that when our functional currency is naira, right? Some of the standard things to do, first and foremost, is you have to have a consistent FX method, like how you are reporting when it has to do with FX. It has to be consistent, not that you're using this method, and I'll talk about that more. Not that you're using this method in the last report and then the next report you're using another method. You have to be consistent, not even just for a particular donor. For your organization, your methodology has to be very consistent, right? So that's number one. And the second thing, when you are converting, because your functional currency is in, let's say, is in naira, it might not be in naira, whatever currency it is, and you're having to convert to another currency. If your donor or partner is, say, in euros, right, and your functional currency is in naira, when you're reporting, you have to report in euro, right? So when you're doing that, you need to convert from naira to euro. What exchange rate do you use? There's usually a question, what exchange rate do I then use? You need to use your actual conversion exchange rates. And that's why in your process, right, and at the end of the day, process is very, very important, even for reporting. Your process is super, super important. In your process for conversion, currency conversion, it has to be in such a way that it is properly documented. So let me give an example. You got let's say 100,000 euro, because I'm using euro as an example now. You got 100,000 euro from a partner for a project for say 2 years, right? That fund is in euro. You received it in euro, but you're going to be spending a lot of that money in naira. So that means there's going to be there are some instances where you spend it in euro. That one is even very straightforward, right? But if you're going to be spending that money in your functional currency, say naira, it means that you have to convert that money from euro to naira, right? And that conversion might not happen at once. You're probably converting at different times, right? If you're converting at different times, it needs to be documented. There has to be a process for that. You don't just, we need $10,000, then you just convert and that's it. There has to be a process. What's your conversion process? There has to be a process for your process. Can be maybe the finance manager or finance team member raises requisitions or initiates that. It doesn't have to be requisition, depending on what your process is. Sends an email to maybe the executive director for approval. Once that is approved, what's the next process? And then, you reach out to your bank and all of that. What's the process? When you have that process, whatever approvals you got from that conversion, the rates and all of that has to be documented. It has to be, you need to have a file where you document all of that, because even for audits, it's a major thing that has to be properly documented, especially if you have a lot of international partners and donors, right? So that has to be properly documented, especially in a country like Nigeria, because the exchange rates, are not always the same for a period of time. So you need to always document your exchange rate. So when you have a documentation of that, let's say for a period of 1 year, you converted 3 times and you have it all documented, it's easy for you to know what the actual conversion rates are. So when you're doing your report, you use that actual conversion rates for your report. So when you're converting naira to euro, you use that particular conversion rates in your reports. And you can also use monthly, even though actual conversion rate is better, right? But I mean, in some cases, you can actually use your monthly average rate. The reason you can use monthly average rate is because for auditing as well, monthly average rate is what is usually used for expenses, right? So that's that. So in some cases, donors might have like specific requirements to say, okay, this is the exchange rate to use or something, but that's very rare. If that's the case, then you use whatever has been required by the donors for your reporting, right? So again, I mentioned clear FS conversion assumptions. It has to be clear to say, okay, the assumptions are, okay, we use actual conversion rates, or we use monthly average rates, right? So those are your clear FS conversion assumptions that you need to have ready. Even if it's not in the report, you need to have it ready so that if you're asked questions, if you're having audits and you're asked questions, you're able to provide, the support documents, the approvals, and all of that for that. When it has to do with audited reports, right? If like I mentioned earlier, some donors are now asking for reports to be audited. So they are not just asking for programs reports, they are also asking for audited reports. So when you're doing audited reports, then you have to be considering FX gain. But in your programs report, you don't necessarily need to, because a lot of those templates don't require your FX gain or FX loss. But when you're doing audited reports, FX losses, FX gain are things that will be considered for that, because auditors would need to align with IFRS standards, right? So that's for the multi-currency. And if we have more questions on that, we can ask. Support documents, we've mentioned this before. Support documents are really important. Some donors don't ask for support documents, right? They don't ask for, they just want the reports, but some donors ask for support documents, and it would, you can lose donors' trust. If you make certain payments and you don't have appropriate support documents for them, you can lose their trust, and they might not say anything. They might just end that contract. But if they were supposed to renew it, right, they probably won't renew it because there were certain support documents that it speaks a lot about the organization that you're making transactions and they are not support documents for it. So support documents are really, really important. Support documents are not just payment receipts or invoices. Their schedules, their approvals, their, bank evidence and things like that. So those are support documents that, so again, what I'm trying to emphasize is you can think that, well, these reports that we're doing or this particular project, the donor or, the partner is not going to be requesting for support documents, right? It's not going to be, but it's important that for every transaction that you have in a report that you're sending to a donor, there is a support document for it, or at the minimum, there is a defense for it, right? You can't just put a figure there without any support documents, right? It's really, really important. The reason is because some donors can come back to say, oh, we want to renew this contract, but we need to do an audit first. If they are now doing if you need to do an audit, right, and an auditor is auditing that report, right, they are going to ask you for support documents. And if you can't produce it, I mean, it's not going to be good for the organization. The second part and area for donor reports, which can be a struggle because it has a lot to do with estimates, is shared costs, right? An example of such shared costs is salaries. For instance, you have 30, 50, 100 team members, right, within the organization. Those 50, 100 team members are not working for just one donor, right? You have different donations, you have different partners. So it's a shared cost. Payments are not paid. You don't pay salaries for ACT Foundation donor team members and then pay for team. No, you pay salaries generally. So salaries is a shared cost. Rent, the space that you use, especially if you're running physical programs, the rent is a shared cost in some. If it's not because there are programs that are virtual. If it's a program that you run virtually, rent is probably not a part of it. But if it's a program where, space is part of the budget and you're using your physical space and all of that, that would be a shared cost. Some admin costs as well, some shared services and all of that. So, I mean, shared costs are usually has a lot to do with estimates if it was not properly stated from the beginning. For instance, let me use salaries as an example. For some donors, the budget would have stated utilization rates. So that one, it would be easy. So if they say, oh, so program officer one, for instance, utilization rate is 70%, of this. So the amount for that is already clearly stated. For those types of transaction is very clear. For some, it's not always that stated. It's just salaries is so amounts. In that case, it would be based on the analysis that your organization does, right? That will say, okay, this is the salaries that we're allocating to this program. And in that case, it means it's relying, that particular information or figure is based on estimates, right? And is relying on your judgments, right, as an organization. So in that case, there has to be a consistent allocation basis. What is your, because even when you are being audited, you will be asked for your allocation basis. What's your allocation basis? And it has to be something that was approved by the management, not something that you just came up with that, oh, let's just allocate 50% of our salaries to so foundation. No, it has to be a policy thing. It has to be it has to be something that was approved by the management, right? Or your board to say, okay, shared allocation cost is usually so percent of total salary for so type of project, things like that. And so that when you are having your account audited, you can bring out your shared allocation basis signed and all of that to back up such transaction or such payments that you have included in your report, right? So shared allocation is another thing that you need to, because a lot of times 50%, 70% might even be shared cost. So it means that whole report is depending, well, let me not say that whole report, 70% of that report or amount that you have put in that donor reports or payments, right, is dependent on your judgment as an organization. So they wouldn't just, if it's an audit, they won't just take your word for it. There has to be a process. What's the allocation basis? What's the documentation? Was it approved by the management, or you just came up with it, right? So those are the things to also note, right? What it has to do with, so what I was trying to say initially about donor reporting is that it has a lot to do with trust, right? It has a lot. This is the financial management is where the partners get to trust you, that, oh, we can trust them. In the last transaction, I mean, the last project they did, their financial management was, very good and all of that. So, I mean, another way you can boost trust with partners and donors is through the published audited reports. If you are not already having your account audited, I mean, you should start. It's really, really important that your accounts are audited and publicly published, because you are a foundation. It really, really takes the trust of the partners from 50 to 100. Like, it really, really takes that trust, because your accounts are audited, and if they are then being audited by a reputable organization, it really, really gives them that confidence that, yes, the finances are being managed properly. They're able to see it even before they reach out to you. They're able to go to wherever you've publicly published it to say, okay, this is how their funds have been managed in the last 2 years and the last 3 years and all of that. So also another thing is timely reporting. So if the deadline for reporting is 13th and you're sending 2 weeks after, I mean, in fact, that one is even, it's not really good at all. So it's really important that reports are sent. So even though you've prepared a very fantastic report, everything is there. If they require support documents, you have all the support documents, but you are sending it after, I mean, the deadline. It really, really affects the trust, that the donors have with you. Governance oversight is also something, especially for finance, right? It's also something that also boosts the trust that the donors have, even in the reports that you're sharing, because the reports that you're sharing with them, they're having to trust it, that this is what it is, right? As you have said, it is. So governance oversight boosts their trust in what it is that you're giving to them. Okay, they have an oversight, they have a board, they have this and all of that. Especially if you have a LinkedIn, like I'd mentioned before, one of the ways to strengthen internal control is actually to have a governance oversight. Clear financial disclosures is also, especially if you are if an audited report is being requested for, it's really important that all disclosures are clear, right? What are the effects bases and all of that is really, really important. So common mistakes, weak variance explanations. I mean, when you have your reports, I'd mentioned before that one thing that helps you to know that you have a very good report is that your partners are not asking so many questions after you've sent a report, right? And one of the major or one of the important areas of your report is also your variance explanation. A lot of times there will be variances, it won't be exactly the way you have budgeted or exactly the way you have planned. But the way you explain it, that variance is really, really important. You can't just say inflation or just say, I mean, just give an excuse that is not very strong. You have to, your variance explanation has to be something that is, that if anybody sees, they'll say, yes, this is a very good justification for why the, actuals is more than the budgeted, or why the budgeted is more than the actual. So your variance explanation is really, 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 really important. Inconsistent FX rates, like I've explained that before, late submission, poor, this one is even from the basis, the poor project segmentation is even from missing support documents is also a common mistake. So if you're able to fix a lot of these things, you are going to be having a very fantastic donor reports for your partners. Next slide, please. Okay, so we've talked about donor reports a lot of times. Has to do with external, right? It's also important for internal because you're using it to track, if you're managing the funds properly. But at the end of the day, when you're talking about donor reports, you're talking about external reports. Now, talking about internal reports, that is where you get to manage the foundation's funds, all the funds that you've gotten, right? And people have trusted you with. This is where you get to manage it, the internal reports, the financial reports, and then we talk about audited report later. For financial reports, it's important that you track certain KPIs. And we'll start with the program to income ratio. And why do you have to track program to income ratio? First, what is program to income ratio? This is, so you have your total revenue or total income, right? Let's say the total income is 1 million. And then you have program expense. So again, in your chart of account, remember we had mentioned you need to separate certain things. One of the things you need to separate is program expenses has to be separated from overhead. You can't have it all lumped together. Program expenses, even program expenses has to be broken down to the different projects that you have in your charts of accounts, right? So for your program expense, your total program, your total income is say 1 million, and you have a program expense of maybe 700,000. That means that your program expense ratio is 70%. So you spend 70% of the income on programs, which is the core of what you're doing, right? So for such a ratio, if you have 70%, that's very fantastic. What that means is that you have a strong program focus. And these KPIs, if you have your audited reports published, these are some of the things that even partners go and check. So they look at, what's your total revenue or total income? They had a total income of 1 billion, and then they spend just 30% on programs. I mean, that's not good as an NGO, right? You should, the minimum industry standard is at least 65% of that is going into the programs, the programs itself. And you don't need to wait till the end of the year before you track that. You need to be tracking it so you know, okay, what is the where are we going wrong? Like, why are we spending more on overhead? Because if you're spending less than, say, let's say you're spending 50% on programs, it means that you're spending 50% on overheads, right? So you are looking at it that, okay, why are we spending more on our overheads rather than on the core of what it is that we're doing, right? So that's why you need to be tracking your programs to income ratio. And even as an organization, it helps you to know whether, in terms of the vision of the organization, as an NGO, right? Your core is to impart and all of that. Is that in terms of the finance? Because the finance tells you a lot. It tells you a lot of story that you not normally get, right? So, I used to say that finance helps you. It's like a prophet. It tells you what's going to happen, what has happened, what is happening, right? So that's how you can get a lot of information, even to make strategic decisions, even for the foundation or for the organization. The second one is program expense ratio. This is similar to the first one, but it just helps to further analyze where the funds are going to. So this is analyzing the total expense. So if your total payments that have gone out, so total expenses is, say, 1 million, right? If you spend 700,000 on programs, that's also very good. And it's all, like I said, it's similar to the first one, but this is comparing to the general expenses now, not comparing to the income. So admin expense ratio, this is overheads now. Overheads, and the industry standard is 15%. So if you have 1 million as total expenses and you're spending 500,000 on admin, then you really need to look at your admin expenses. It's really high when you're talking about industry standard for an NGO. Like I said, These things are some of the things that some partners look out for, when they're analyzing you, researching you, especially if you have your accounts published publicly. They want to see, okay, the funds that are being given, I mean, the funds that they get, how is it spent? What's the percentage to programs, to overheads, and things like that. Program personal expense ratio as well. It just measures the cost or the amount that goes into personnel cost as well. The next one is fundraising. And this helps to analyze the fundraising efforts, right? So you're going on fundraising trips and all of that, doing fundraising projects, programs to raise funds and all of that. You want to also analyze, the money that is going into that compared to what is coming in. So I'll still use 1 million as an example, as income that has come in, and you're spent 500,000 for fundraising for fundraising alone. That's not efficient. Then you have to look at, okay, it helps to make decisions such as, are there better ways for us to go about our fundraising? What is it that we're doing that is not working? Because if you're getting 1 million and you spend 50% of it for fundraising, fundraising efforts now, road shows and all of that, programs for fundraising and all of that, then it's not efficient. Industry standard is below 25%. In fact, 25% is high. You should be looking at 10, 15%. Again, it depends on where you are at as an organization, right? So when it has to do with cash management now, liquidity ratio is something that you really, really need to be measuring to be sure that, and this helps, with liquidity risk. You want to make sure that you have funds. Any organization, profit, non-profit, cash is king. If you don't have cash to carry out, to make payments, to meet demands, there's already a problem, right? So ability to meet short-term obligations, this helps you to see that. And of course, fund balance ratio. And this fund balance ratio helps you to see that, okay, the funds I have, because a lot of the funds that we have as NGOs is not as 70-80% of it are for programs that are restricted, right? So this helps us to know, okay, when you take away unrestricted programs, what do we have left? And this just helps you to know if you're doing well in terms of your cash. Next slide, please. Okay, so in terms of tools, right? And before we go into tools, I think I mentioned it earlier that tools are there to support us. If we don't have a good structure, if we don't have good internal controls and all of that, we can have the most expensive tools and it will still not help us achieve our goals at the end of the day. So these tools are just there to help. They're there to help to support what it is that we already have, the structure that we already have. We can't automatically pay $1,000 for a tool today and everything just changes in our finance. In terms of the effectiveness of our structure, no, it won't. Where we start from, like I said, is having a structure, having a finance manual, building our chart of accounts clearly and all of that. And then the tools help, support that. So looking at the tools, at least in terms of my experience, the tools that work well and are very good for NGOs. QuickBooks, I would recommend. QuickBooks Online is very good, especially if you do not have a lot of budget for tools or for accounting softwares and all of that. QuickBooks Online is very good. The reason why it's also very good is because you can scale. Like as you grow, you can move on to the next package, next subscription and all of that. I think it's the lowest, if you're just starting and you don't have a lot of budget for that, I think the lowest is about 28,000 monthly for QuickBooks. And with QuickBooks, you can still customize your chart of accounts to fit into what it is you want it to be based on your structure and all of that. So QuickBooks Online is very good. And as you grow, you can use the QuickBooks Advanced for that. ZoBooks is also very good. ZoBooks is also, especially if you don't have a lot of budget, it's even is way, in terms of cost, right? QuickBooks Online is even a little bit expensive than ZoBooks, right? But almost the same price actually. ZoBooks is also very good as well if you're still growing. Sage 50 as well if you're still growing and you don't have a lot of budget. But in terms of when it has to do with NGO and customizing, QuickBooks, is very good. If you have, more budgets for software, you can go for Sage Intacct, and they even have the one that's specific for non-profits. It's just that it's quite pricey, right? So that's why I said if you have the budget for that, Sage Intacct is very good because they also have the one for non-profits, and you can customize to what it is that you want it to be. Microsoft Dynamics is quite pricey, but the only thing with that one is that you can customize it to what you want. Other tools for reporting, Power BI, Tableau, you can use Microsoft Excel as well, for your reporting dashboard. And, we have talked about KPI. So in your reporting dashboard, you can have those KPI built into it as well. So you are seeing the percentages as well. Even though some of these softwares have dashboards as well, but if you have additional KPIs that you want to be tracking and all of that, so you can use this Power BI, Tableau, Microsoft Excel. And I'd mentioned before, filing is really important. So you can use Google Drive, and you can maybe reach an IT support person to help you, build this if you don't already have, because it's really, really important. The filing is very, very important for especially for an NGO, is really, really important because you have team members coming in and out, and you don't want to rely on one person for your documentations and all of that. So that's why that is also important. I talked about you can't take away non-finance team members from finance, right? So one of the tools you can use for maybe when they're having to initiate requests or requisitions, you can use Zoho Expense. And, if you don't want to go for that, you can just have forms that you build, and then they can use that to maybe raise requisitions and things like that. So like I said before, it's not really about the software itself. The software helps, but the best system is not just about the expensive software. It's about your structure and all of that. Next slide, please. And also, something that you can consistently maintain. If you go for a software that is quite expensive and then you pay for it month, 1 month, 2 month, 3, and you can't continue paying for it, then it would have been better that you used a less expensive one then. All right. So if you are transitioning from manual, so let's say you've just been using Excel or Word documents for a lot of things, right? And you want to transition into an accounting software. Somebody might ask, how do I start? Where do I start from and all of that? The very first thing, again, is have your structure settled. You need to have the structure first. Have a clear charts of accounts and all of that. Get all your donor balances ready, and all of that, not only donor balances, all of your balances. So if you have receivables, you have different Excel sheets that you've used for that, know what the balances are for every of those transactions, right? And then for each chart of account, so if you have a chart of account and you're saying, okay, revenue, then this and this and that, know what the balances are for each of those charts of account that you are built, right? Then define a cut-off period, right? So you need to know, okay, we are transitioning, and everybody needs to know that that's the time you're transitioning. So you're transitioning 1st of so period, right? Or 1st of January 2027, we're transitioning, and you begin to work towards that, right? So choose a date for migration. Now, you know that if you choose, say, 1st of January 2027, December 2026, right? All of the balances you have at that time, you become your opening balance in the accounting software at the beginning of that period. So you need to have that cutoff period. And then I mentioned processes, and also train the people. So if you're using if you're using QuickBooks, for instance, right, you need to train, your staff, the people that are going to be using this software, you need to train them on how to use it properly, so that, there are no errors, because you're just transitioning. So you have to make sure that they know how to use it and all of that before that migration. And in that process as well, there might still be some things that you do manually, because, you're just migrating, and you don't want to totally do away with the manual. It has to be gradual, right? We have to be, realistic here. So some things might still be done on your Excel and all of that, but, you gradually transition into that. So things like, maybe if you sell, there are things that you sell, maybe books and all of that. Some things can still be done on Excel, and gradually you migrate everything into the accounting software. And of course, build this one, whether it's accounting software or not, you need to continue to track your KPIs, your budget versus actuals, and donor balances and things like that. So that's for your transitioning. Next slide, please. Okay, so we talked about accounting structure. We talked about a lot of technical things, right? Charts of accounts, internal controls, and all of that. Um, Another thing that having a good accounting structure does, which is really important for nonprofits, is financial sustainability. Financial sustainability, let me ask a question. If you do not have certain donors continue their their contract with you, will you be able to survive as an NGO? If the answer is no, then you're not sustainable as an NGO, because anything can happen. And that's really what sustainability is about. Anything can happen. So if a particular partner says, oh, because of so and so policy, new policy has come up and all of that, we can't continue with this project. Does that end, your organization as well? So it's really, really important that you are sustainable. And how can you be sustainable? Your accounting structure can actually help you with that. One of the ways is ensuring that your cash flow and reserves are properly managed. You maintain an healthy cash flow. Let me explain this cash flow thing, right? It's not, especially for non-finance people, it's just money that is coming in. How are we managing how it's going out? And you're not doing it at the point when the money is going out. You have already planned for it from the beginning. So cash inflows, cash outflows, right? Funds that we've received from donor A, B, C, D. How is it going to go out? You've already planned that you've already planned how everything will go out before they begin to go out, right? So out of $500,000 that we have, this is what is for donors. This is what is for the foundation overhead. This is what we can put aside as reserve, because you need to continue to build your reserve, for your organization. There's also endowments. This session is not about endowments, but building an endowment fund is another way to build sustainability. But if you cannot even start with that, at least you start with having reserves, right? Such that if maybe certain donors, you don't have certain contracts going on at some point, the organization can still be alive in quotes, right? So cash flows and reserve is very, very important when it comes to sustainability. Another thing that some organizations do in terms of sustainability is they usually have sustainability fees whenever they are proposing to their partner. So at least you propose it. If there's some foundations or some organizations will say, no, we're not adding that. But some organizations do see the need for that and they add it to it. So for instance, if the total budget for a project is, say, 100,000, you can have a 5% sustainability fee. You explain why you're having sustainability fee in your budget, right? Some organizations agree to that because they understand. In fact, they even support it. Organizations that know that you are sustainable, it encourages them to invest, to donate or to give grants and all of that, because they know that you're not using their money, right, to meet up with your overheads. They know that you're sustainable as an organization and all of that. So you can build you can build that reserve by having a sustainability fee added to your budget, right? It can be 5%, it can be 2%, you can, that, but normally it's usually around 5%. So you know what that percentage is, and then when you get the funding, you put it aside as reserve. And of course, you don't leave it idle in your accounts. You invest it in low risk investment. So you begin to build that, and that is something that can be used for your overheads over time, or if unexpected things happen within the organization, you can use that fund for that. So cash flow and reserve, very, very important for sustainability. The second one is funding diversification. Build diverse and sustainable funding sources. You don't, like I mentioned, okay, well, I'm not sure I mentioned it. You don't want to have just one donor, right? Or just two donors or three donors. And then what if, it's just like for profit-making organization, you don't want to have just one customer. It's very risky. It's a risk, right? To have just one customer or two customers. So you want to continue to ensure that you have different funding diversification. And you can come up with different ways. Some people do I think I've forgotten, giving different innovations or things that can bring funding to the organization. Some people do giving Thursday, giving Tuesday, and all sorts of things just to ensure that you have diversity when it has to do with your funding, right? Processes, we talk about processes, very, very important. There's no need to talk about that more. I mean, yeah, process is really, really important. And you're making data-driven decisions. Like I gave an example earlier that you can have $1 million in your account, right? And if that fund is not properly managed, the risk is not today you would see the effect, it's in the next 5 years. If you have projects that are running for 5 years, it's the next 5 years when you need to make certain funds for that project and you can't get the money. That's when you would see that. So it's really, really important that you are making decisions based on data, payments that are going, you are moving to a new office, any information or any decision that you're making as an organization, it has to be based on financial data, so that you're sustainable as an organization. Next slide, please. Okay, so we're coming to the end of the session, and I hope that this has been very helpful for a lot of us. I just have a few questions for us that I want us to discuss very briefly. So how many minutes do we have left? So we can know how to go about this.
You have 10 minutes left.
Okay, 10 minutes. Okay, thank you. Okay, so yeah, and I want this to be, you can raise our hands, we can speak at this point. So the first one is, if an NGO cannot locate support, I think I mentioned something like that. An NGO cannot locate support document during a donor audit review. What do you think is going to happen? What are the risks for the organization? Please, we can raise our hands, we can speak, maybe drop it in a chat of accounts. I say chat of accounts in the chat box. So yeah, we can speak actually. Can raise our hands if we want to speak.
Yeah, they'll need to raise hand or I will
Yeah, you
unmute
can
them
raise
to
your
speak.
hands, or you can drop your comments in the chat box. Loss of confidence. Yeah, somebody said loss of trust, loss of confidence. The NGO losing donor funding, non-renewal of contracts. I mean, it's a lot. The possibility of losing future funding. Yeah, somebody is raising his hands. It's a very possibility of fraud. Thank you very much. It can go as far as naming it as fraud. I mean, thank you. Yeah. Audit report becomes qualified. Thank you. Blacklisting. Thank you. It shows weak, internal controls, loss of trust, high possibility of losing donor funding. Somebody is raising his hands.
Yes, Lemon, you can go ahead and give
Okay,
your
you can go
response.
ahead.
All right. Good afternoon, and thank you very much for this wonderful presentation. It's really, really, really important. We
Thank you.
actually learned a lot. Regarding the question you asked, this is something that just happens to us, in particular myself. We are having a donor visit and a very big visit to some extent, NHF. And I kept this policy on my desk, trying to go through it so that when the donor come, I can be able to depend on that. So, but when they came after assessing all document, everything, then I said, please, can we have this policy? I look everywhere, I couldn't find this policy. I look everywhere to some extent, like we have it here, like we went to the archive, we can't find it because I know actually I removed it there. This is how we just stay. No question, nothing we can be able to respond to a kind of this situation. So it's actually really, really good. And this caused us not to have this opportunity, actually. Thank you.
Wow, thank you for sharing that. Something that just happened to you very recently. Reputation risk, financial risk, funding risk, a lot of risk. As simple, and that's why I mentioned as simple as that is. It might just be like, actually, it's just invoice. It's not just this, it's not just contracts. It's really, really important. And you really don't know, because sometimes during audits, like some of us will know, they won't ask you, they probably won't ask you for all the documents, but they can ask you for one document because they will do samples, choose samples, documents for them to ask you. And they ask you for some document and you can't provide it. I mean, loss of confidence and all of that. So the next one is, an organization depends on one donor for 80% of its funding. What strategies can improve sustainability? I mean, we might want to share because this also ties to our funding and sustainability as well. So depends on one donor for 80% of its funding. What are the things that can be done to improve? Of course, the obvious thing is to look for more funding, but diversification. Somebody said diversification. And we can raise our hands if you want to ask. Fundraising. So it means that what that suggests is you have to go into fundraising mode, right? You really need to do a lot more with fundraising. The organization should learn reserve. Okay, so what this also means is that the organization is going to be it means that the organization is literally depending on that donor to survive as a foundation, right? And a lot of donors don't. It's a red flag for a lot of organizations. It's actually a red flag. It means that the overheads and everything, especially if you don't have other things, maybe income from other sources as an organization. When I say other sources, maybe paid programs or paid, maybe you sell things, books, and all of that. It means that that organization literally depending on that partner, and it's a red flag for some partners and all of that. Looking for more donors, yes. Going up with activities that can help develop income generating activities. Okay, someone said embracing social enterprise alongside our non-profit program, local fundraising and all of that. Thank you so much for sharing. Reduce budgets. If the budget is already approved, I'm not sure you can reduce, but the only area you can reduce budget is maybe the overheads area, but yeah. Okay, so the next question is, different spreadsheet balances exist across departments. What controls or automation? We've already mentioned this, so I'd expect everyone to be able to say something. So different spreadsheet balances exist across departments. What controls or automation improvements would help? What controls or automation improvements will help? Okay, strengthen internal controls like segregation of duties. Okay, is this speaking to John? Is this speaking to the third one? Strengthen internal controls and segregation of duties. Okay. Okay, so for the third question is, different spreadsheet balances exist across departments. What controls or automation improvements will help? Okay, build structure that combine all the records, follow structure and policy, role-based access control. So one of the things for this is to have standardization reconciliation system. So one of the things for this is, if you're using an accounting system, right, you won't have, even if you have Excel sheets, different Excel sheets, it won't be so much, right? Those Excel sheets are just like schedules to support what you have in your software or your accounting system, but that's not where you are literally getting like the information from. So the best thing is to automate. You shouldn't have different spreadsheets all around. You should automate, have everything in one accounting software, right? Having to learn to use the spreadsheet accurately and follow particular templates. And if you have to use spreadsheets, right, you have to define what spreadsheets, in terms of decision making, what are the different spreadsheets that are being used to make decisions, even though it's not advisable. It's advisable that you have your system automated, and you can then have spreadsheets that supports that, right? So that, your information is coming exactly well-structured chart of accounts. Thank you for that. Consolidates the accounting system. Exactly. Consolidates the accounting system. If you're having spreadsheet, they should just be like support schedules that just further explains what you already have in a consolidated accounting system. Okay, so the last question is, project spending is significantly above budgets. That's how you even know this is if you're even tracking, right? Project spending is significantly above budget halfway into implementation. Now, if you're not tracking, because for some organizations, they just track, oh, payments coming in, they're not tracking it alone. And which was why I said budget and cash flow management is really important, especially for NGOs. So the way you even know that you have gone halfway is because you are tracking, right? So if you are tracking and your project spending is significantly above budget halfway into implementation, what reports, KPIs on control should have identified that earlier? Program to income ratio, yes. Program to income ratio, because you would see that program to income ratio, track your budget with actuals. Yes, you're tracking your budget with actuals. Okay, consistently present your budget. Thank you very much. Consistently present your budget versus actual with your management timely. Thank you. Yes, budgets versus actuals. So budgets versus actuals for the organization, that's one. Then budgets versus actuals for the different projects that you have. Because the way you would see where that variance is coming from is when you are tracking for the different projects as well. So at the end of the month, right, you have budget versus actual for your organization in general. Then you have it broken down into the different projects as well. So budget for social projects, and this is actuals for specific projects. And then KPIs. So KPIs is what will help you quickly know that there's something wrong generally, and also for the different projects. Commitment control. Yes, commitment control. And that's why somebody is raising his hand. So that's why this commitment control, this has to be built into the system. And that's what we are talking about, where from the points where they are initiating payments, there is a system that allows for whoever is approving to check with the budget. So it's not approved, if it's not in alignment with the budget. Somebody was raising his or her hand. You can speak, please, if you're muted. Okay, maybe. Is somebody still speaking? Okay. Yeah, so somebody said,
yes, we
okay,
need to move on. We need to move on before time.
Oh, okay. So how many minutes more do we have?
Time is up already,
Oh, wow.
but I
Okay.
can
Thank you
take
so
5
much.
minutes here
Okay.
for questions.
Okay, so I think the next is just questions. Next slide, questions. So if we
Yes.
have specific questions, I don't know how many questions we can take now, and then we can.
Okay, so we have some questions in the Q&A chat.
Okay.
Do you want to look at it, or should I
Okay, you can please
read
help
it
so
out?
that
Okay, I'll read out.
I'll try and look at it too.
Okay, yes, there's a question. If a donor gives funds in tranches and with the fluctuation in the exchange rate, how do we report that on the donor template when it is within a year?
Okay, so a donor gives the funding in tranches, right? That's
Yes.
inflows that came in. How do you report it in the donor reporting, right? So when it has to do with inflows, a lot of time, the donor templates, what they are looking out for is in terms of how the funds are spent or managed, right? But if in the template, you also need to include how much was received. It is the fund, the exact amount you received in that currency that you put as the inflows. So if you have received, say, the contract is $50,000 and you received 10, right? What you have as inflow is still $50,000. That has not changed. Where you have to consider FX is in terms of the outflows, right? And that's why I mentioned that you need to have a process for conversion. So you are conversion. So if the payment was made in Naira, for instance, if you're in Nigeria, so payment was made in Naira, then it means that the payment was converted at some point from that currency to Naira. So that conversion process has to be seamless, has to be documented, and it's the conversion rates that you then use. And I also mentioned that you can use an average monthly exchange rate if you're not able to get the accurate, but the most accurate one is the conversion rates that you have documented, and that's what you then use for the conversion. So if you got $20,000 at first, you converted at say 1.5, right? And then you also got another 20,000, you converted at 1.6, then last one converted. So you can have an average of 1.5, 1.6, 1.2, and then that becomes and then you have all of those things documented, the approvals, you have everything, documented in case of audits and all of that. So that's it. I hope that answers the question.
Yeah, also so. Thank you very much. Please, for those raising up their hands, please, we won't be able to take questions. Please, you can drop it in the chat room or send us an email. We definitely get across to you, Olushola, for us to respond to some of your questions. So we'll just take a final question before we wrap up. For organizations currently using mostly manual financial tracking, so if organizations using manual financial tracking, what practical steps do you recommend for transitioning into a structured accounting system without disrupting operations? What
Okay,
practical steps do you recommend?
yeah, so I think I mentioned it briefly during my presentation. The first is you need to identify the accounting software that you want to use. You need to define the process. Do you already have a process for your operations, right? So who does what? What officer, who is responsible for what, right? All of those things has to be documented in your policy. Once you have the policy, you also need to build your chart of account. You can build the chart of account manually first to know, okay, revenue, these are the codes and all of that. And then I'd recommended some, accounting software. You get that accounting software. And I mentioned that first and foremost, you need to have a cutoff period, right? You need to know the day that you're transitioning, so that if you're transitioning 1st of January, you know that you need to get all your end balances by 31st of December. And those end balances become what you input into the software as your opening balance, because you need to start with the opening balances. That's after you built your chart of accounts, and then you can continue like that. And like I said, there are some things that might not transition, you might not be able to transition into immediately, but that's the best way to go about it, and it won't disrupt. Again, it's also advisable that you do this during a period that you don't have a lot of activities going on. So if your organization maybe usually take breaks and you don't usually have lots of programs or activities during December, January, that would be a good time to do that transition so that you don't have a lot of transactions happening during that period. So I hope that's also, was helpful.
Yes, I'm quite sure. So I'll just take a final one,
Okay.
just to wrap up. Okay. The person says, in the preparation of a budget, when applying for a grant, and a particular exchange rate was used at the time of preparation. When the grant was awarded, there was a drop in the exchange rate. How does an organization go about this?
Okay, so that happens a lot, right? Because exchange rate is not stable in Nigeria. So that happens a lot. When for your donor reporting or for your reporting, it is the exchange rates as at the time you converted that you use, or the average, like I mentioned, not the exchange rates that it was at the time when you were sending that budget. You might think, well, they won't know. How would they know? Especially if you're not declaring. But the truth of the matter is, the partners you're working with, they know what's going on in Nigeria. They know what's going on in South Africa. They know, so they understand what is happening. So they are not surprised. In fact, they will be surprised if it's the other way around, that that is not reflecting in your report. So you need to use the exchange rate at the time that you had converted that currency into the functional currency.
Okay, thank you very much, Olushola, for that insightful and value-packed session. Please, can you give Olushola a round of applause? Use your best
Thank
emoji.
You, everybody.
Show us some love. I'm waiting. Let's show us some love. Let's say thank you. Tell her thank you. And the session has been one thing that stood out for me is the need for organizations to have structure. Structure is very important. Structure will help you to be financially sustainable. Thank you very much. I really appreciate you taking our call to be able to take this session. We thank you very much. On behalf of the management of our foundation, we say thank you very much for that presentation. Yeah.
Thank you.
Okay.
Bye, everybody.
Yeah. Okay. Before we go, we have a survey, feedback survey. I would like you to complete to help us to better improve our training. Please kindly fill it. The link will be dropped in the chat room. We appreciate you do that. Thank you very much. It's picture time. I would like to. It's time for us to put on our cameras um, and put on your best now. Please put on your cameras for us to see so that we can take a screenshot of the session. Yeah, I'm waiting. Okay, and really appreciate everyone. During the conversation, I can see some people have their team members in your room listening attentively to the session. Really appreciate that. Thank you all for everyone who has stayed right from beginning to now. Really appreciate that. Please put on your cameras. We will take a screenshot now. Right. Okay, this is your best smile. Yeah. Good. 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 It's just 1 more minute. 1 more minute to take the picture. Okay, the link to the survey will be dropped again. I saw a question pop up just now. The link to the survey will be dropped in the chat room now. So to bring the session to a close, we'll take the closing remarks from our senior finance manager, Agogo Eraputobo. Mr. AG, you have the floor.
All right, thank you very much. Thank you, Zimbabwe. Thank you everyone for attending this session. I think I want to really thank our facilitator. She did justice to this subject, and you can. In fact, having listened to her, I'm sure you'll agree with me that accounting is not that difficult. Am I right? For those who don't have accounting knowledge, I'm sure you would have become accountants after this class. And for those who already have, I'm sure you have something new that is added to your knowledge today. So we want to thank you for joining us. Anytime we call you, you are always available. It is because you are there. That is why we are doing this. And trust us, in ACT Foundation, this is what we do every time. In the next couple of weeks from now, we are having another session. So we encourage you to join us. Always follow us on our social media pages. You will not regret, following us. Our website, everywhere you see ACT Foundation, be sure that you are going to get something, to better your organization. Our aim is to develop this sector, and we want to encourage you to help us to develop it together. On behalf of every one of us here at ACT Foundation, I want to say thank you again. Thank you to our facilitator, and we look forward to seeing you in our next training. Thank you very much.
Thank you very much, Mr. AG. Mr. AG has allowed me to make a bit of an announcement. I was going to say our next session is happening soon in July with the title Building Organizational Culture and High-Performing Teams. Please be on the lookout for that information. For everyone who registered, we'll definitely share that information with you as the day draws close. That's what Abiodun mentioned during our presentation. We have a podcast show where we showcase the work of change makers in Africa. Please do well to listen to it on our YouTube page _Act Foundation. We thank you very much for joining the session. It has been a powerful and very valuable session. Once again, we thank our speaker for the session. Thank you also for joining. We appreciate you. Do have a lovely afternoon. Bye-bye. Yeah, to